Yeah, what's cracking YouTube? We back with another episode from Trenches to the Riches, y'all. Listen, now today we're gonna talk about the Chinese stocks that I've been bullish on, been talking about. That's in my portfolio, okay? That I feel like is going to the moon, y'all. All right, I've been telling y'all when Alibaba was in the $72 range, $86 range, even the $90 range, that these companies is all buys, okay? Neo under $8, $7, $6, $5, $3. Okay, we've been buying the dip from the highest to the lowest, okay? And even with this huge market pump, I still feel like these companies is overvalued, okay? Alibaba is trading at a 10 ratio, 10 PE ratio, okay? And the company is, if it was labeled as a tech company, as a US tech company, this stock will be $300, $500, $600 a share right now, okay? But it's trading like that because of the Chinese risk that we have internationally and the government messing with the Chinese stocks. But at the same time, we all know that's news. We all know news in what's going on in the actual business play a huge difference long term, all right? So we're going to go over the Chinese stocks and why I'm bullish on the Chinese stocks, okay? Now, we're going to go on cardtrum.com and we're going to go over the information, okay? Right here, we got Neo stock, okay? We got Neo stock. As you can see, revenue going up. Revenue going up. This is a new car company, but this is a risk. I'll say this is a, how can y'all say it? Risk reward ratio, okay? You can win more than you lose with this stock because it's a cheaper stock, all right? This is a non-profitable company. This is considered as a penny stock, all right? A lot of great investors don't like to invest in penny stock. It's now $7 a share. I was buying it all the way down from $5 to the $3 range, all right? And now, as you can see, I'm up big on Neo. Not nothing big, but percentage wise, I'm up big, all right? Now we're gonna go to the next sector, Alibaba. Now this is the giant. This is the big giant. As you can see, consistent revenue going up, all right? Consistent free cash flow going up, except for 2022, all right? A lot of cash on their hand, all right? They have about 85 billion in cash, $20 billion in debt, okay? 4 billion in capital lease. So altogether they have 60 billion in cash, okay? They got the buyback program. So as you can see, since 2021, they've been slowly buying back shares, getting shares back into your pocket, all right? As you can see, the price is up 48% year to date. It went to $68, 74, 70, all right? Chinese investors is happy. We finally getting a relief, okay? Next stock, we have Tencent. As you can see, consistent revenue growth, all right? Consistent upward free cash flow growth, okay? They're not buying back shares, but you can see they have more cash than debt, okay? BYD, the Tesla, all right? The Tesla of China, all right? Free revenue growth going up, free cash flow growth going up. But as you can see, they have a lot of cash on hand compared to debt, okay? Only $1 billion in debt, basically $2 billion. That means they have $14 billion in cash, all right? And you know what they could do with that. They can reinvest it back into the business. They could pay a dividend or they could buy back shares, okay? Next stock, we have Baidu. Baidu, the Google of China, y'all. Revenue going up, free cash flow going up, all right? They have a lot of money. They have a lot of money, about $22 billion in cash, okay? Now, these companies is skyrocketing. Neo is hitting all-time records on these car deliveries, y'all. All-time records on these car deliveries. And this is why I'm bullish on the Chinese stocks, because besides the news and what's going on and the risk, these is the top companies in China. Yes, China is in a recession. Yes, China is in bad times. Do I feel like this could last forever? No, I do not. Do I feel like we're out to win right now? No, I do not. The Chinese decided to give stimulus checks back into the Chinese economy, y'all. So you know what's going on. People want to buy more cars from Neo and BYD. They want to shop on Alibaba website. They want to spend more money on video games, okay? They're going to be doing more research using Baidu platform, okay? Besides everything that's going on with the Chinese government, these is the strong companies that have consistent revenue growth, free cash flow growth, and they're less expensive than the than the Amazons and the Microsoft that's trading at rich PEs in the 40s and the 30s and the 55, some even in the 60 range. These companies, if they was in the US, would be trading at those levels as well, but they're very cheap at 10, 15, under 20. All right, so that's why I feel I like to have my money. Now, do I regret doing individual buys? Because once I started my portfolio, I was just doing $100 a week, $100 a week. And unfortunately, when I was doing that, that's when the Chinese stocks was really at the bottom. I'm doing more as my portfolio is growing. I'm doing more individual buys in sectors that's beat down the most. But I did that after I decided, like, hey, my portfolio is at a certain amount. It's time to do individual buys. And by the time then, I was really already up in my Chinese position. So what do I plan on doing? Buying more. I want to see a little pullback from this rally, all right? A 5%, 10% pullback. Alibaba is around 105, 109 right now. I would love to add more in the $90, low $90 range, the low $85 range. If I could get it back at $70, $69, then hey, that's when I do the triple down, double down on the position, okay? Y'all know how this going. I've been preaching about Chinese stocks in this video right there. Also, that video right there. Getting a lot of views. People love these Chinese stocks. There's a lot of investors in these Chinese stocks, all right? And retail investors have the chance to get in before the big big money come in. The big institutions come buying these companies at, raising the price up. All right, so if we buy, us retailers buying before Wall Street and all the investors around the world want to get into these stocks, we got it at the bottom, all right? And that's what long-term investing is about, all right? This is not me give you financial advice, okay? This is not financial advice. I'm just telling you what I'm doing with my money, okay? Now, we're going to watch a quick video on CNBC of a lady talking about the Chinese stocks, all right? So let's get it.
To a slightly lower open ahead of the last trading day of the quarter. And joining us right now is Stephanie Link. She's Chief Investment Strategist at Hightower, also a CNBC contributor. And Stephanie, one of the huge stories this morning is that massive gain in Chinese stocks once again this morning, up more than 8% after the big gains we saw last week. You were adding to some of your positions that have exposure to China last week. Which ones are those, and what do you think of what we're seeing this morning?
Yeah, I mean, the China stimulus is the most since COVID, so it's big. There's more they can do. They sound like they want to do more. We got a little bit of different news over the weekend as well, additional stimulus. The issue here in my mind is that this is such an under-owned space, Becky. The outflows in 2023 alone were $30 billion. The stocks trade on average at 10 times forward estimates. And the emerging markets, the weightings from portfolio managers has gone from 35% to 21%. So There's a lot that can happen here in terms of just playing catch up. And by the way, I would say that if money comes out of India, because India has been the beneficiary of the problems in China, if money comes out of India, I would be buying India as a long-term buy. But China, I think, is a short-term to medium-term trade. And the names that I have been buying, Freeport-McMoRan, I have owned that in the past. I thought that's like the poster child for China. Las Vegas Sands, which is still down 2% on the year, and ExxonMobil.
Wow. ExxonMobil, explain China.
All right, y'all see what's going on. So if you want to get into the Chinese stock, do I feel like it's too late? No. Everybody interested in the Nvidias and the Teslas and everything at all-time highs. When Nvidia was at $200 a share, right? And it doubled to 400. A lot of people said, is it too late to buy? Can I buy now? But where's Nvidia right now? It's at a 3x and went from 200 to 400. And just because you didn't catch the bottom doesn't mean you can't make money off of these stocks. Another episode from Trenches to the Riches, y'all. Let's get this money.